everyone, welcome to Qianmo Accountants. Today I'm going to talk about something that every accountant, business owner, and finance students needs to know about, and that is cash flow. If you are already working in accounting, you've likely been asked to prepare cash flow statements. And if you are still looking for a role, understanding cash flow, how money comes in and goes out, will definitely help you demonstrate your accounting knowledge to your potential employers. So, what is cash flow? Cash flow is like the lifeblood of a business. In comparison, profit is like the fat of a business. Without fat, you may be very slim and you may not be quite healthy, but without lifeblood, the business dies instantly. Even it's got so much fat and may look so healthy all along. Technical wise, it's very straightforward. Cash flow is the movement of money in and out of a business. When money comes in, that's a cash inflow. Things like customer payments, borrow from a bank, or new investments from shareholders. When money goes out, that's a cash outflow, and that could be rent, staff wages, supply payments, tax or loan repayments. You borrowed money to others, or even someone stolen your money. At the end of the day, you compare inflows with outflows. If more money comes in than goes out, then that's a positive cash flow. If more goes out than comes in, that's a negative cash flow. And here's the bottom line. A positive cash flow is what keeps a business alive. You got to have a positive cash flow, which is the blood of your business, no matter whether the business is currently making a profit or not. So why cash flow is more important than profit? Well, there is a bit of differences between profit and cash flow. Profit is an accounting calculation whether you have made money or made a loss. Say you sold 100 units of your products, you've made profit, right? But how about none of your customers have paid you? Does that matter to you? I believe that matters a lot. And that is cash flow. You want the cash flow in time. So you can feel how important is cash flow, right? On the contrary, you received some raw materials from your supplier, which is the cost that you make your own products for sale. Those raw materials you have used up is the cost of your business operation. But say the due date to pay your supplier is 3 months later. If you didn't sell any of your own products this month, then you have incurred some losses this month from an accounting point of view. But hey, you have got cash to run your business at the moment. Let's hope 3 months later, you've got more sales and you've got cash from the sales flows in. Otherwise, you will have problem to pay your supplier. Then you'd be in real trouble 3 months later. So in accounting, we have profit and loss statement on period basis like monthly, annually to measure if the business is performing well generally. But we prepare cash flow statements as well so that we have a better idea the pattern of how cash flows in and out for a period of time. The cash flow statement is historical, but we can see the pattern and use it to forecast and better manage the cash flow as the business operates. Because it's just so important to maintain the proper amount of cash in a business. In fact, poor cash flow is one of the most common reasons small businesses fail. So, as an accountant, how do we work out a cash flow statement? The logic is actually very simple. Say you are preparing a cash flow statement for this month. With the cash you have on hand at the beginning of the month, you just add all the cash that comes in within this month. And then you deduct all the cash that you have paid out during this month. See what you have got left with, and the amount that you have got left at the end of the month should agree to the cash you really have got at the bank at the end of the month. Then you know that you have got this statement correct. We prepare this statement not just for the purpose of preparing the statement, right? We want to understand how the cash flows in and out. So we break cash movement into 3 main categories. The number 1 category, the operating cash flow. This is the day-to-day stuff, cash from selling products or services, minus the cost of running the business. It's like the heartbeat of the business. And number 2 is the investment cash flow. This is the cash used to buy or sell long-term assets. For example, purchasing new equipment or selling off an old building. Those aren't everyday transactions, but they have big impact over time. So any cash inflows from selling an equipment or any cash outflows from buying an equipment goes into this category. And the 3rd category, the financing cash flow. This is cash raised from or returned to the investors and the lenders. This includes issuing shares, receiving loan funds, or paying dividends. We want to know how are we doing with the financing activities. So looking at all 3 together gives us the full picture of the details as to how money moves in and out of a company. How to manage cash flow then? So when you are working as an accountant for a business, or if you are a business owner yourself, how to manage cash flow? To start with, we do a cash flow forecasting. We've already got the cash flow statement on hand for the previous month or the previous year. We follow the same templates and the cash flow pattern, and we predict the cash flow movements for the coming month, the coming quarter, or the coming year. It helps us plan ahead and avoid nasty surprises. We also speed up the inflows, like send invoices quickly. As a commercial accountant who works in a small business, sometimes we also need to follow up the overdue accounts. The business sometimes may offer small discounts for early payments too, because every dollar coming in earlier makes a difference. And we control the outflows. We try to negotiate longer payment terms with the suppliers. We manage expenses carefully, and we avoid unnecessary spending. Commercial accountants sometimes get involved with those tasks too, because commercial accountants' job is not just recording numbers, but also helping the business manage its money day to day. And we always keep a reserve of cash in the bank. This gives a peace of mind and covers emergencies if anything happens. Even a small buffer can make the difference between surviving and struggle. Makes sense, right? So if you are a junior accountant, helping your employers or your senior accountants managing the cash flow may be one of your daily tasks at work. And if you are a business owner yourself, make cash flow your number 1 priority. Thank you for watching. And if you want more insights into accounting careers in Australia, I've put together resources and training to help people become job ready for accounting industry here in Australia. Check the link in the description to learn more, and good luck on your accounting career journey.